Hello and welcome at Stocks Advisor channel. In today's episode we'll talk about ARKK Innovation ETF, ticker name ARKK. It's actually a ticker with a market capitalization being really big, and if you look at the decline for a market capitalization of about 23.5 billions, we see already a negative decline several weeks, which is going from the level of 160 to the level of 110 now. And if you look carefully here, like two weeks ago, we tried the ticker tried to balance around just below moving average 50 after having this move, but then moving average 50, the blue line, worked as a resist, and now we have a secondary decline. And usually secondary decline is very interesting in a sense of entering there, because it might give us nice opportunities here to enter and actually to make the trade. So let's do a quick analysis here in order to understand how to play with ARKK. First of all, as always, we have three moving averages depicted here. These are green, blue and red line. Correspondingly, here on the left you see their legends being moving averages 20, 50 and 200. And if you look at them, you already see that we almost had today actually going to have next trading day so-called delayed magic cross down, which means that moving average 20 hits from the top moving average 50. So this usually should cause the price to go down, but the price is already there. Therefore, it works as either the stopper for the decline or actually as a bullish effect. So we might observe the spiking. It might take a little bit lower, but in general, the spiking might be there, and because the distance between moving average 200, the red line, and actually other two moving averages, so between the magic cross itself and moving average 200 is quite big here, it might open actually very interesting opportunity, because delayed magic cross will work here as a very strong attractor. It's not that the price will go all the way there, but at least to 125 we might expect some move, because this is a very strong support line and also very strong attractor. Let's call it S1. So with this target, and actually also being a target for our always discuss at our channel, which is between 10 to 15%, we can plan our play and our advice video based on that. So speaking for profit taking, it's really advised to take it in time. Don't be too greedy. Be professional. Try to develop positive trading experience from multiple positive trades rather than sitting in one stock hoping to become rich from it. This is usually not possible, and kind of a reason why beginners fail in their first year of trading experience. What is important next to see here and to note is that actually by June by end of June, beginning of July, we saw the formation of the trend line, which today worked as kind of a phantom support. Let's call it a T1 line, because later in by mid of November, beginning of December, it switched to a faster trend line T1 that was finally broken actually and completely neglected now, but still T2, sorry, but still T1 worked as kind of a phantom support line. So this makes it very strong channel to enter first, which will be between current price and moving average 200. So if you would write it here, this will be there for, let's say, 101.20 to 110.20. So this is the first level where you can enter, and then based on technical, let's say, rebounds from moving average 200, which usually also takes place, and actually the expected S1 line is an attractor, the profit from 10 to 15% could be made here quickly. Also, other parameters that are very strong here is the fact that RSI wise we are already in oversold area, so once we have any move, it might be really big. Also, if you look at MACD histogram, it's making a secondary negative wave. Usually it means once it starts bottoming and going up, we might have a very strong push in the price. It still probably will be at least 3 negative waves action, so we will have a third decline. and it would mean that we are actually going to form kind of a channel, and the top of the channel, actually a triangle actually between T1 and this line R1, which is still about to form. It will start from previous high, but the angle of this line, still unclear, will be defined by the top of the current repulse that we are expecting. So once repulse is there, we will know the angle of R1 line. Therefore, I write here question mark, because we don't know yet the angle. But once the angle is known, the triangle R1T1 will form kind of consolidation triangle for this stock. If it's really going to form it, it will be seen by next 2 days actually. If not, if we continue to decline, it will just mean that we might have a deeper angle triangle, and maybe it will be the flat part of it. So we will see it later, but for the moment it looks like that R1T1 triangle is going to form, and therefore for midterm traders it might open very interesting volatility situation, and it looks like we'll be accumulating around S1 for longer period, and once it's decided, we might have a secondary spike. But this is more for mid and long-term traders. For daily traders, we just need to catch the wave. So this is the first entry, and if we are going to go lower, if we decline just due to technicality, of course we just buy in again, and this would be according to our mixed analysis a non-linear average down approach. And it would mean that actually the next buying opportunity will be just here between actually 85 and 92. So let's write it here again. This would be this circle, and it will make the channel of 85 to 92. What does it mean, mixed analysis, that we follow at our channel? It means that we place our analysis based on 3 pillars. So one is the technical analysis, of course. The second one is non-linear average down, and non-linear is very important word here, based on support resist levels. And the third one is mitigation of possible negative catalysts. And negative catalyst is something that might coming, simply speaking, news or some negative effect from the company which you do not know coming, but once it's there, it usually causes a severe price decline, so you need to be prepared to average down there. And with this being said, usually these are the third levels that we discuss, kind of a doomsday scenario. And if you look there, this should be the principal support. And principal support here is the line when in general T1 trend was formed, the very first trend. And of course, you can see that the formation was happening in this period by mid of June in this channel, which if we would actually write it in numbers would be for us the level between 66 all the way to actually 72. So why is that low? It's not that we say the price goes there, but it's just a mitigation of the risk or hedging of the risk if negative catalyst kicks in. If some grave news comes in, you will be anyway prepared. So this is very important, because we don't advise any stop loss, but we advise a bit longer trading approach, but exiting with profit. So it's a little bit different approach we do. And what does it mean? It means that you average down non-linearly. So meaning that you enter with, in this case, it will be 1-2-2 strategy. What does it mean? It means that the funds you would like to play here, you can split in 5 portions, and then you can buy with 1 portion in the first circle, with 2 portions in the second circle, and again with 2 portions in the last circle. So this way, each time you average down, and that's about non-linear averaging down. Whenever you enter, your current price will be closer to the channel where you average down each time. So this way, once there is a repulse, you can make your 10 to 15%. So this really tuned for that according to our calculations, and this is the best mitigation you can get here from mathematical point of view, because once you mitigate all risks, what is remaining, you don't need to take loss, you just take either profit or you exit with a draw in the worst case scenario. So it's just time you pay, but not money. It's a little bit different approach, but really like it, because stop loss is more for, let's say, professional traders, for those who do daily trading, just sitting next to their PC, working with 15 minutes candles. But if you are just a person who wants to invest from small or even big amounts, who just want to check it occasionally, daily wise, let's say, then you need to be more smooth approach, more stable, based on principal channels. And that's, I think, the mixed analysis, and exiting without loss approach is quite nice. Of course, it could be a bit longer in time wise, but then you don't spend your money on that sense. So that's kind of idea we approach within our mixed analysis. And that's the way to play with ARKK at the moment. So very nice stock, although declining, which is pity if you're already in the position, but opens very interesting opportunities. And if you're patient enough, you can make a good profit here. So with this being said, good luck with it, and see you at another episodes of Stocks Advisor channel.